My friends, what is going on? Welcome back to the channel. So, threw out there on Twitter, if you do 1,000 likes, I will get you a video. So, you held up to your end of the bargain. I'm going to hold up to mine. And it's awesome that, number one, I'm always humble and grateful anytime you guys do that. I'm always humble and grateful anytime somebody wants to listen to me talk about stocks. So thank you, thank you, thank you. You guys know the deal. Nothing about this video is financial advice. I just want you to make great decisions for yourself, your family, and your portfolio. I want you to take the information that I give you, and I want you to use that to analyze charts. And like I said, make decisions. Even if that goes, I look at a chart and I go, dude, I totally disagree with everything that Colin is saying. I think this chart is going down versus going up. That's great. That's what I love so much about, my Discord is we have lots of eyeballs looking at charts all the time. We can play devil's advocate with each other. I strongly encourage you, does not have to be mine, to find yourself a community where you feel plugged in with good people who are like-minded individuals who are always pushing themselves to be better. That's what I strive to do in my community every single day, and that's what I'm going to continue to strive to do. I'm going to go over a bunch of charts. Some are going to be ones that I like for topside. Some are going to be ones that I like for downside. The number one criticism that I always get is, oh, well, you just, you talk about all the different things that can happen. And that's what I'm going to continue to do, because the reality is that is what can happen when it comes to the stock market is, there's a bull case, a bear case, and a consolidation case. Another common misconception is stocks have to be moving for you to make great trades. For what I like doing with the largest part of my portfolio still to this day, which is wheel trading, I actually prefer stocks to be in a consolidation range, because they're very easy to scalp when you have clear levels going on. So I'm going to go over a whole bunch of different charts, and then we'll wrap it up and we'll call it a day. And I want you to go enjoy your weekend, but I also want you to be ready with a plan come Monday. So having said that, last week overall was a terrible week. It didn't get good till kind of the second half on Friday. And we have a lot of important daily candles coming in. We had our first 50-day simple moving average touches in a very, very long time, since the lows that we saw in April, pretty much across the board. Both SPY and QQQ, put in nice volume hammer candles, which have come after are about, overall the pullback was about in that 4 to 5% territory. And that is your typical pullback on indexes, typically before you see a higher move. Obviously, we've got the government shutdown that's really starting to wane on not only other places in the economy, but also too on the stock market. And the longer and longer it looks to be gridlock and liquidity not coming in, the worse and worse things can potentially get. But from a technical standpoint, which is all I care about, I don't ever care about the noise of the news or anything like that. I'm a very firm believer, and it's a show me the chart and I'll tell you the news. That's why I said I think that we are going to have the end of the government shutdown was going to come this week. Now we're running out of time, right? Like we need to get that done come open on Monday. But just between the price action that we saw, the puts beginning to sell off in a very wide margin. I actually meant to have that pulled up on unusual whales. I apologize, guys. But we, a lot of times the first sign of bottoms getting put in, where we can see upward price mobility, is when a ton of puts start selling off in the flow. And we saw that on Friday. Now, I do want to be clear, just like I went over with my team and the overall weekly VC, where I cover a whole lot more charts and dive even a little bit deeper, that as of right now, on a daily basis, our structure is still very sound, where we are putting in consistent higher lows and higher highs. That's on the more macro structure. The lower time frame structure is still overall very bearish, where we have been putting in a series of lower highs and lower lows. Now, we potentially saw the end of that come Friday. So not only did we get a ton of volume coming in, but we put in, like I said, a nice hammer candle. And the reality is if we were analyzing this chart, just like we would any other chart, if this was a 15-minute chart, we'd be looking at this as we got a push up, We came back, we filled the gaps, we retested our breakout levels, and now we're starting to push up again. That is the way that I would and do analyze all this. So overall, I am anticipating topside at least the first half of this week. Now, where the rubber meets the road, if you will, is can we put in a new higher high? So overall, I think that is the most likely situation, especially if the shutdown comes to an end. What we need to be watching for and what we need to be careful about is how do we approach this previous highs. So what I want to see on Monday is an overall gap up with a relative strong push. And this would overall kind of give us a Morningstar look. Now, a Morningstar candle is typically a very small candle, but the overall idea is the same, where we'd have the pivot of the strong sell-off, we have the hammer candle, plus we have a strong push-off going into Monday. Now, where I will be, more on watch, more concerned, more watching price action than anything, where I will be an observer, is once we get back up here to our discount zone. So once we start getting above 617, between 617 and basically all the way up to about 630, that is where we need to see bulls really take over. If we see weakening price action, like our candle spreads get smaller and smaller and smaller, and our volume continues to drop off more and more and more, what we've got to be cautious of is the rollover at that point in time, where we come up, we get a deep retrace, and then we get a rollover. And just like if you watched my momentum trading psychology video, this would be where it is we push down, we start to push back up, everybody goes back into the rally is back on, mindset. It was just, you missed out on a generational dip buying opportunity. But especially like if the government hasn't reopened yet and things are looking weak up here, you're going to want to watch out for a rollover candle that then potentially could give us a new lower low. And then overall, that is when our macro structure has changed. Up until then, we are what I call innocent until proven guilty. Once we come back up here, if we do roll over, then we're starting to get into guilty until proven innocent category, where overall the bears are going to be what's in control, and we're in a shorting the pops territory. So what I don't want to see is, I think we could even come up as high as the gap fill up here, but this bear gap that's left open, people commonly mess up with gaps, and I know this cover a lot, but if you're annoyed, that means you're watching my stuff a lot, and I thank you. So, but people always say, "Oh, we're going to go for the gap fill." That means there's no price action right here. We can just slice through resistance, and it's actually the exact opposite. These gap fills act as strong supports, and they can also act as strong resistance. So getting up here into the gap fill, especially between the golden pocket and this 786, so really let's call that between about 632 to about 623. That 7 to 8 point range is really where you have bears will take that opportunity to step in the hardest and the strongest, and that's where we could get our much deeper retrace. Now, this is where, he just says anything can happen. I'm trying to help. But every day I'm on Twitter and I interact with people and I look at my comments and other people's comments. It's very clear and easy to see why there are a few people who make an insane amount of money out there, and there's a lot of people who don't. And I'm not trying to rub anybody the wrong way, but it's just because some people's just mindset and short-sighted thinking mentality is just way off. So you should always have a plan of what is my most likely, and also having a plan of going, where am I wrong? Knowing, accepting, and understanding where you go, this is where I am wrong, is just as important to understand where you could be right. So the first area I potentially see us having some issues, it's just when we get back up here to this EMA cluster around the 20-day moving average, the daily 9. However, I think we'll get some intraday rejections, but overall, I think at a minimum, we're pushing back up towards 620 all the way up into filling the bear gap down. Now, I will say this, if we completely fill the bear gap down, I think any type of retrace is still going to be a very viable one that we will then put at a higher low and then go to a new high. I will only be really concerned if that bear gap overall stays wide open, we get a strong rejection, and then we put in a new low below what we saw on Friday, this Friday, November 7th. So what we don't want to see, well, unless you're bearish, I will get pretty bearish and even get some puts if we start coming up here, we have weak price action, and then we put in a stronger rejection by stronger volume. Then I think at a minimum you come down and test equal lows, if not put in a new low at that point in time. Currently, right now, I'm in nothing but call positions and sold put positions. So overall, I'm still very bullish. I sold puts all week this week on Tesla, and I swung calls in QQQ. Which, knock on wood, as of right now in after hours, those are all still well in the money and should open very nice come Monday, assuming futures is decent. So, SPY, not quite as strong of a chart as QQQ in my opinion. Same thing though, we did bounce off of the 50-day moving average, but I really want to see SPY recover kind of like that 675 area. The best thing that we could do with this resistance, we don't want to see that 675 to 673 turn into resistance. So the best thing that we can do with it is gap above it. A strong gap above and a strong move topside on Monday will overall make me feel pretty good. And who knows, maybe we'll do some follow-up videos this week. We'll wait and see how it goes. Got to stay focused with the team in the Discord first. IWM, I like this daily candle. It is the one though, however, it's still below its 50-day. It's below all of its 921 SMAs. And it's below a key resistance level that I have right around 242. So overall, IWM would fall into that category of where I talk about it is guilty until proven innocent. Start to reclaim these levels, IWM will start looking much better. Also, too, VIX. So after multiple rejections around that 20 level in the 200 SMA, which is that red line on my screen, we blasted through it, shot all the way up towards 23. However, put in what would be called a gravestone doji, where there's a long wick at the top, small bottom. So overall, what we want to see too is we want to see VIX continue to flush back out and move back towards that 16 level. Anything below 16 is going to be very good for the indexes overall. That's where you'll see that slow grind higher overall on the indexes. An elevated VIX back above that 19 to 20, which it is still elevated, to be clear. At 19, it's still elevated. So VIX reclaiming some key levels back over 19 to 20, and it would wave the caution flag, especially if we see like the overall market make a strong move topside and VIX to be moving topside. So if the markets are really green, we want to see VIX really red and slicing below those key levels heading back towards 16. Now, let's talk about some individual charts. I'm always going to cover Tesla, even though it is, for the most part, consolidating. The great thing about Tesla for me is it's always very tradable even when it's in a range. The reality is it hasn't gone anywhere in basically 2 months since September 15th, and it's just trading in a range between 415 all the way up to 470, 480. Now, the great thing about Tesla is even when it's in a range, it's still so volatile because it's so heavily traded that it still presents itself a lot of opportunities. I've literally been selling puts every time we come down here to like the 420, 430 range, and I haven't been, I was selling calls initially back up here when we first came up here, but I haven't been here recently. I didn't this week, mainly because I was very confident, posted multiple times on Twitter that Elon's pay package was going to get passed. It was going to pass with flying colors. It passed with 75% of the vote, I don't think, which means that there's 25% of the people holding Tesla shares who are completely retarded. But, you know, vote anyway. So I do think that we have some troubled waters up here on Tesla, mainly because, you know, anytime, you know, like I said, I said, this is what sucks about Tesla. I said this on Twitter, you know, we'll get a small pop that is going to get faded. Didn't even make it to market We got like a 3% pop, and then that faded. Then it was kind of pushed up overnight. Then before market open, it was already red, and then sank pretty hard. I'll be honest, I bought some calls on Tesla above 430 on Friday that are currently red. And it's a little concerning anytime Tesla's a lot weaker than the overall market. So the overall market ran strong into close and ran strong after hours. I didn't even look at what Tesla closed up at after hours. So it did. So Tesla did pop up a little bit after hours. That's good to see. But the calls that I'm in, I am currently red on by about 15%. Because once we started to regain 430, I bought some calls, and then we sank below that. I actually think I was like 432 or something when, this hour. So yeah, I was like at 433 whenever we bought calls. So Tesla, I don't like the fact that we have this overall little bear gap down right here. Now, this is a common gap. Those are the gaps that fill 80 to 90% of the time. So I am quite confident that we are going to do that. Now, if the market is weak, we could absolutely come down here to that 414.50 to 411 level before catching a bounce. The strongest thing, and what I want to see Tesla do, is I want to see it gap up and kind of lead this as a little island bottom. And I want to see it gap up, push up to like 455, maybe even as high as 460, but before then catching another rejection and potentially rolling over, and I'll be long gone out of my calls. But when we look at this on the daily, I do think that up here, kind of like what I was talking about on the indexes, around this 440 to 450 level, we've had multiple rejections. Really up here, Tesla isn't bullish to me. Isn't bullish to me on a more macro scale until we start looking good above that 454 level. So I really thought that Tesla, hand up accountability. Like I said, Tesla was going to close at all-time highs this next week. It did not, but I honestly thought Tesla was going to run well above all-time highs before the vote happened. So we had the Monday candle, which was looking really good. Like we're closing up here at 468, highest daily close ever, I think. No, we had one other daily close that was higher than that back in December. So second highest daily close ever. Then this is really where it was like, oh, freaking A. We had the wind knocked out of our sails on Tuesday with the major gap down, but then Wednesday we recovered. And so I really thought maybe Thursday leading into it, we could then push up and get to all-time highs. And then I thought maybe we would gap above all-time highs before then giving up a lot of that move on Friday. So like I said, it was overall I had the right idea but not the right timing of it. So I mean overall with my option trading, I had a red week overall, losing out a little over six figures on Tesla call contracts. But it's part of it. I would take this setup that we had on Friday. I would take the exact same trade every single time. When I buy short dated options like less than a couple of weeks out, I'm always priced to zero on that. And when you price to zero, that means sometimes they go to zero. I mean, it didn't quite go to zero, but it was close enough. Like I said, took a big loss overall. Had a lot of other good winning trades throughout the week too, where I took enough profits on that where I was just like, okay, guys, going into the Elon vote, I fully have a defined risk of right around $100,000 if this doesn't go my way, and I'm 100% okay with that. But the largest thing that I did with all my capital last week, like I said, was sell puts, and I actually got assigned some of those at 440 with the close that we had, and I'm totally okay buying shares up here. I've already told my team that I have some levels though where I talked about Tesla's drawdown at the beginning of the year. Was I anticipated the pullback, but it became a way more bigger deal. Obviously the whole Trump and the overall market exaggerated that, but I'm not going through that again. So I have some levels that I'll be watching, that I'm going to cut a very large portion of my Tesla shares if we start to lose some key levels. And I'll jump back in right whenever I want to. Sorry, I'm already spending way longer on Tesla than I intended to. So I am concerned that on Tesla, if the market overall is strong, then we kind of push back up here towards that 454. And then if the market gets weak, we can absolutely see another rollover back down here. So it will be on a touch and go day-to-day basis. Any type of gap above Friday's high is certainly what I want to see. And then, like I said, recovering these key levels, there's just a lot of resistance that is built up here. So we don't want this to turn into, some massive double top. But the candles aren't pretty. The volume's not pretty. So if it goes down, I'm not going to be shocked at all. But I think the most likely is a dead cat bounce before we do go down. All right, I'm going to go through some of these charts a little bit faster now. NVIDIA, I love the looks of this. Anything above that holds above kind of the 183 to 184 level, real simple. This looks like a breakout and a pullback and a retest. The volume stepped in dramatically. They do have earnings coming up, so keep that in mind. However, I just don't see a world that Trump and them don't continue to back NVIDIA, and whether they work a deal out with China or not, like the U.S. is not going to go down quietly losing the AI race to China. So I still fully think NVIDIA is going to do well. I think they're going to have great earnings. And it's just all about watching this key support resistance flip level here. But just like last time, whenever it broke out, now you're getting the opportunity. I mean, like I said, it just came right back to this order block. Buyers stepped in. Looks really good overall. Want to see it hold that 183, 184 level. Palantir, same thing. This is as simple as it gets. Holding that key level. I've had this level marked off on my chart since back over here in August. Came back, retested, volume stepped in. Want to see Palantir overall, one of the more retail darlings, step in and start to do well. If you push up towards that 180 to 190 level and things start to look weak, same thing, just like what I was talking about with indexes. Be careful up here about the rollover at that point in time. But I tell this to my team all the time, you treat support as support until it's proven otherwise. One that I've talked about before that I'm really starting to like the looks of is Lyft. Talked about it back over here. Took through earnings, getting a very positive look on earnings. You're getting your daily 921 cross up. That just means your 9 daily EMA is crossing above the 21. That is overall very good, very bullish. And not only did you get a positive reaction to earnings, but you're seeing that dip get bought up. You're seeing the volume come in. Lyft is very close to just creating a massive island bottom. I know this is kind of hard to see. I'll go to the weekly here in just a little bit. But this is a massive gap down that's right here. In fact, let's just do this. We should have already had this look. Let's make these white. Oh, does my face look? My camera just froze. Dang it! I got a stupid look on my face, but we ain't starting this over. Y'all just clip it and make fun of me. I'll get over it. Swear. So on Lyft, right? I showed this chart a million times with the looks of Hood, with the looks of Palantir, with the looks of Coin, that going through this accumulation phase, robotaxi is going to be on the front of everybody's lips going forward. The autonomous driving, Lyft and Uber and all those, they're going to be involved in some way, shape, or form in these ride-sharing businesses. So this is absolutely something that it looks like is exiting an accumulation phase. Same thing. If this was a 15-minute chart, you would be looking at, oh, well, I easily see this coming back up here towards 34 to 35. So this is a great opportunity, in my opinion, of course, to, and when you're looking at it from a weekly chart basis, you just have to decide, do I want to buy a grip load of shares? Sure, you could buy leap calls. Timing this type of move is not something I'm interested in, especially when the stock is still $22. You can buy a lot of shares and just set it and forget it. And like I said, on a weekly basis, you get above kind of this 22 level and your volume is coming in here, this thing can very quickly head towards 30, and then you start building a base above 30 and you're probably going towards all-time high. So I easily think that this can be a, let's just see here. So that's a 40% gain to 30 and then a 200% gain all the way up towards all-time highs. I love the look of lift charts. Look at, so this is where it IPOs, goes through its distribution phase. Now it's going through its accumulation phase. Look at all the volume that has come in here. Lyft, in my opinion, is a great opportunity for shares to just set it and forget it and look up one day and be like, oh, I'm up 100% on Lyft. Coin, Bitcoin and Ethereum having some slower days today, but continue. So Bitcoin continues to hold this resistance, support resistance flip of the all-time high trend line. What was the all-time high back from May of 2025 before it broke out. I agree that this overall looks very distributive. So that volume that's coming in here is very distributive, more volume on your sell days than on your buy days. So definitely want to see this. We'll feel real good once we recover the 200-day moving average. But up until then, as you can see, every time these EMAs catch up, it just keeps continuing to first force Bitcoin down. I posted about the potential head and shoulders right here that pushed up, failed, rolled over again. So you just don't want to see consistent doing that. Obviously, you're around that key psychological level of around 100,000 for Bitcoin. So it is at a big spot, which means if it does recover, your companies like Coin can do very, very well. I posted in the Discord at Coin at like 290 on Friday, and I was like, ooh, I like the looks of Coin here after it dropped down and it bounced off the 200 SMA, and then looked up at the end of the day and was like, dang, I wish I would have taken some Coin there. So if crypto remains strong, want to see this continuation, same thing, volume stepped in, where it really, let's see here. Let me go over here to MicroStrategy. So with MicroStrategy, really saw the volume start to come in here after it dropped back down and getting towards that key support resistance flip around 200. So I do think, same thing, it's been continuously, every time it gets towards those 9 to 21 EMAs, it's getting rejections and just rolling over. But this is what you want to see when you're actually looking for bottoming action, is that volume stepping in, really bullish candles. So I like Coin more than I like MicroStrategy, just personally. And it needs to hold, right here around this 280. But especially if Coin starts to get above 330 again, it's going to look real good and real clean back towards 350. Start looking good above 350. You're probably going to make new all-time highs at that point in time. Another chart, EOS. This is one we cover every single day in the Discord. So you had the breakout, you had the consolidation, long-term consolidation, you get earnings out of the way, you get a huge volume move on Friday. Now, I already told the team this, be careful about chasing up here, because typically after a really strong day, you're going to need some days to chew on it a little bit, like right here. Really strong day, had a 13% day. You had to have some days of consolidation before then you got the further move up. I still think, like Lyft, EOS is a great chart for holding on to shares. Same thing when we zoom out here and we look at our weekly chart, right? Like this is how long we've been looking. I mean, this is how long since beginning of this year. We've been charting it in the Discord back down here at like $3. So a lot of people have really good positions, but same thing. Very similar to Lyft. Once again, that IPO distribution, volume low, goes through a long-term accumulation phase. Here's your spring. On your spring, you had your lowest volume overall. You get that strong push up, and then volume has been riding this thing the entire time. So I fully expect EOS, and this is still a name that most people aren't even talking about other than the small circles on Twitter. Like you just go ask somebody like, hey, have you ever heard of EOS? And they're going to be like, I don't even know what you're talking about. Even people who, are astute investors. But look at the support resistance flip. So here was the IPO. It was a ton of support. Then it became resistance in August of 2021. And now it is making a massive, that 1450 is a massive support resistance flip. Your weekly 9 caught up, bounced right off of it. Volume came in. I really like this look. And once again, for me, I'd be just playing it with shares. But you do whatever is best for you. But this is a great looking chart. Another one that post earnings. So we had open, drop down, drop below the bull flag, but then same thing, shoved right back up. Very similar to what I just talked about on Coin off the 200 SMA. So it's I always say I don't care what the earnings numbers are or anything like that. All I ever care about is how does big money react to it. And I really think the day after earnings, how does it do on the open market during regular trading hours tells you the most. And this thing essentially right from open just immediately gets shoved straight up, and overall almost, well, I mean it did, it closed exactly flat. That's crazy. This type of move reminds me, I've showed it before, but AMD, which by the way is coming back, retesting its breakout move, very similar to this flag that we tracked in AMD that just took forever. And when you get these V-shaped recovery moves, that's a lot of times when people get left in the dust. So it doesn't mean that open's just gonna, full send out of here. However, when we look at the support resistance flip that it made, essentially from where it opened, open jokes, from where it opened, right? This support resistance flip right here came in here, and you have volume stepping in, all things that you want to see in this type of situation on a massive gap down on earnings. So now, once open starts making its way up and out of here, you'll probably get something like this, and I really think it's overall going to walk its way up and out of here. It's still a very good look. You have a lot of big Twitter accounts, big investors still pumping the crap out of it. So it still has a lot of retail interest, which is not always a bad thing. People just always want to be like, oh, retail's just going to get bagged. And they absolutely do at times when they're stupid. But I still think this is a good looking chart. I don't have any crazy price targets on it, but I wouldn't be surprised at all if in the next 3 to 6 months we look up and opens up here somewhere between like 16 to 30 bucks. I really wouldn't. No position for me on that one. One stock that I am in is Unity. I love the look of this stock right now. Very similar to what I've talked about in the other ones. Those big macro support resistance flips. I love the fact that Unity is closing up here in the 40s consistently now. Any dip post earnings has been soaked up. They did really well on earnings, so just want to see it continue to hold this kind of 38.98, and I think it's going much higher from here. The big next step is going to be, can it start clearing and up into the 50s, which I think that it can. Back when it first came back down here to this daily order block, I threw up, here's how I would do it. I would buy shares. This is how I would set up my risk to reward right here, and almost got stopped out a few times, but it's looking great. I'm still just in shares from 28 on this deal, but kind of same thing. I've showed you guys a lot of weekly looks. Nice weekly close. Obviously, we had the ugly rejection, but that was also, if you think about what the market was doing on Thursday and Friday, Unity held up very well overall. So I still love the looks of this. Just want to see it continue to base above that 39 and stay in the 40s. Start seeing that as an accepted price. Another stock that I'm in, so I rode QS all the way from 12 up to 1850, and then I sold, and then I rebought at 16. So very similar to the same look that I talked about on Tesla. Overall, I do not look at this as a double top. Now I want to continue really over that 1679 is what I want to see, because same thing, right? I always tell the team how I look at any chart is how I look at every chart. We need to make this support resistance flip up here around this $16 to $19 level. But all it needs to do, same thing, accumulation period. Now we're getting our markup phase. Volume is coming in, very similar to EOS. So now what I want to see is I want to see that big week, very similar to what we saw back over here or even over here when I made the video in September, is I want to see that week that we really put in that new high and start closing and accepting the $20 price targets for QS. That happens, I mean, you can see that once we start getting into the $20 range, this thing can easily move up to the 30 to 40s pretty quickly. So absolutely love this chart. I love the fact that they've got earnings out of the way, similar to EOS. They've got earnings out of the way, and we're continuing to see this chart bid up at that point in time. Like Just want to continue to see those moves up overall. You just want to see that buying volume is coming in, and then any red days, which are going to happen, any of those consolidation days, you just want to see that volume very low overall. Like this recent move, this is why I step back into the chart, is on these recent moves, you have a ton of volume, and these walk down days, even though they're ugly days, 4% days, minus 12% days, that overall volume is low. Right here, minus 6% day, but very low volume. And then same thing, every time those dips come in, the volume is stepping up a little bit. So I still absolutely love QS. Another one that I'm in from $1.30 is ASST, Strive. Just like I talked about in the trading momentum with open, right? I said open, went through this, low volume consolidation before it got its next big move. ASST, huge volume move, very low volume. Then you start getting volume on this gap up here. Volume comes in, that same gap up gets defended on Friday. So overall, if this gap right here keeps staying protective around that $1.30 and those dips keep getting soaked up, this thing is overall going much higher in my opinion. I would absolutely say that, yeah. And I mean, if we gap above, I'm telling you right now, the first day that it starts to gap above this $1.60 to $1.80 level is probably a day that you see this thing absolutely rip all the way up another, a 30-40% move. I think you'll go well into the $2 when that happens, especially if there's a ton of volume with it. Then the next big level we're going to be looking at is right around that $2.50 level. But I think it gets there relatively quickly. I'll be honest, I don't have the greatest plan right now for my shares, other than my shares and my cost basis allow me to just sit back and chill and kind of watch this chart. I think there's a very good chance that overall we can make our way up to the 200 SMA, then maybe come down here, sort of build out another shoulder in the 2 before then. I mean, it's going to take time. I'm not here just for some crazy squeeze play. I'm looking at this as a chart that, very similar to the other ones, missed the initial move out with this price targets down here, but then got the deep retracement. No, I do not want to get rid of that. But got that deep retracement. I'm looking forward right to the 786. Now we're consolidating in the 618. So yeah, up towards 250 is my next price target. I still absolutely love this look and the volume that has now come in here on this one. Love it. It's a great looking chart. Okay, finish the video with a couple of charts that I think potentially could have some downside. Number one is Oaklo. Going into earnings, which earnings is always the wild card, but this thing is building out a picture perfect head and shoulders. We have our left shoulder, head, right shoulder, volume decreasing the entire time. This thing has already had a ugly pullback, right? This thing was a 50% pullback right here. It's all going to come down to, can they actually produce anything that is getting up here to the valuations? It's very similar to what I talked about with all the quantum stuff. Can they actually prove that their share price should be what it is? Because remember, the market is a forward-looking vehicle, so it's a lot of it. That's why we always hear buy the hype and sell the news, right? So companies like Oaklo, they've had a ton of hype behind them, but now we're starting to get to that point: is can they deliver? This looks very distributive to me right now. Now I'll say this: if this head and shoulders pattern, which is clear as day, if it fails with their earnings, it's making new all-time highs and probably going much higher, to be honest, because this overall is a long-term consolidation period right here. So it's either, in my opinion, coming down here towards its 200 SMA around $64, maybe stop up here, so 80 to 60, or it's going much higher. Man, like even all the way up to 300. So they have a big earnings coming up to kind of tell us what's going to be going on. Are we actually distributing and going to need to come down and get a deep retrace? Because it's done it before, right? Right here, came up here, double topped, came all the way back from 55 all the way back to 17, 18 bucks before then going on an epic run. So really deep pullbacks. I've also had this channel up here on it where it kind of overthrew this channel. So we extend our bottom channel out, right? Things don't go well. Comes all the way back down here to this bottom channel around 60 before then making its way back up again. That is not crazy in any way, shape, or form. So if the overall market is ugly, if nuclear names get ugly, I like Oaklo for downside and a lot of it, to be honest with you. Another name to keep on watch is going to be Meta. So just like I talked about with Open, seeing a really great reaction post bad earnings, Meta had, and I said on Twitter that I think that this dip might get snatched up when it didn't. And now we start seeing that 200 SMA becoming a very strong support resistance flip. Like it shoved up that day, couldn't get above the 200 SMA. And then you are seeing heavy volume selling this name off. Bronx, when he's like watching the flow, he keeps talking about like, I just see continued call selling over and over and over again on Meta. So it's like, even though it already dropped a massive, 12% post earnings, now it's all the way been as deep as a 20% retrace. Now, volume did step in here on Friday. You put in a nice hammer candle, but what I will say is if the market does the float up move that I talked about, and I'll use NVIDIA as the example, post DeepSeek. So this was when NVIDIA came down here, bounced off of its 200 SMA. So this was all the DeepSeek stuff. Then it sold off below, and myself and the Discord all played puts right here on NVIDIA because I said if this thing pushes back up, we get a low volume walk up in this kind of rising wedge / bear flag look, right? And that volume dipped out. It was an easy, made a ton of money playing puts right here on NVIDIA. So if the market overall kind of does the float up move that I talked about, and Meta has a couple of days where it just kind of floats back up here towards the 200 SMA and it creates a like rising wedge or bear flag look up in here, starts doing this, and that volume continues to stay really low, I absolutely like Meta for a lot more downside back towards like the mid fives. Because when we get out here on a weekly basis, right, clear double top on the weekly, just like this on the weekly, right? So look at that weekly. That volume sucked out. Then they go into earnings, just massive. So continue to watch for that pump back up. And I really think when you look at this thing on a weekly basis, if it came all the way back to here or even lower towards the 480s before catching a move, and then who knows, maybe it builds out the world's biggest weekly head and shoulders look. We'll just kind of have to wait and see. But this right now, you're at a pretty decent size support resistance flip. So I think we'll see at a minimum, right, a dead cat bounce right in here. I apologize. Bro, I've been talking to y'all for way too long. The timer on my ribs is going off. I got to get out of here. But so we're at a decent weekly support resistance flip right here. So if you're bullish, you just want to kind of see it build out, see that selling subside, and then start to cool up. If you get that sharp, quick rebound, but the volume is really low, like I said, watch for that, and then continue downside at that point in time. So I hope this video was helpful to you. Please like and subscribe. You know the deal on that kind of stuff. Follow me on Twitter, Colin_Gladman. If you're interested in joining my private trading community, I open that on Fridays, and I only post the link on Twitter while it's open. I only take a small amount of new people each and every week, and sometimes don't open it at all. So we'll just kind of wait and see. But overall, I'm expecting good things from the market. I think there will be opportunities in both directions, despite what type of trader you want to be. Overall, if anything, like I'm still a perma bull. If anything, I think overall the market is only going to go higher and higher and higher. I'm not a, but I also don't live in the extremes. I'm not a crash tomorrow or squeeze tomorrow kind of guy. That's just not how I approach things ever. So, like I said, hope this video was helpful to you. Please like and subscribe, spread the word, tell your buddies, all that good stuff. And last but certainly not least, thank you always for following me, for liking and subscribing, anything like that. Like I said, at the end of the day, I'm always grateful to anybody who's willing to listen, and I certainly hope this helps you make great decisions for yourself, for your family, and your portfolio. Have a wonderful weekend, my friends. I'll see you soon.